Andrew, welcome to the show, man. Thanks for coming on.
Hey, thanks for having me. Appreciate it.
Absolutely. So you were saying before the show, are you getting pounded a little bit with some snow in DC?
Last week, yeah, we got about 8 inches and then a couple
Oh,
inches to
wow.
follow. Yeah, so here they don't really know what to do with the snow. Usually we
Yeah.
get maybe one snowstorm early February a year, if that. But they got it early this year, so they actually closed the school system down for 3.25 days, and that
Mm.
was following a weekend. So we were holed in with the kids for 5 days, trying to give them stuff to do while working.
Do you guys normally get that much snow, though?
No, I mean, in the last few years, we probably got maybe 2 or 3 inches max per storm. I would say every 6 years we get a big storm, one that's got you shoveling out for a couple of days. And then there's like the once a decade storm that only seems to hit when I'm on vacation and need to get home.
So tell the audience a little bit about yourself and what you're doing and what brought you on today.
Sure, yeah. I mean, the quick version of the bio is had an interesting career. It's all been about data analysis. So I started my career as a epidemiologist, which nobody knew what that was until COVID happened, and then everybody knows what it is now. So I was doing cancer analysis in different communities and looking at things like where does the mercury come from in the Gulf of Mexico and how does it land in our tuna fish, things like that. Started Went to grad school for engineering management and then started working for various entities, government agencies, non-government agencies as a consultant for a publicly traded company called ICF. That got me into all kinds of stuff. We were doing things like assessing orbital debris from commercial space transportation all the way to assessing impacts of different nuclear regulations on nuclear plants. And well, I liked it. What I loved was an assignment that I got to develop some software for the Pentagon. I was working at DoD for about 3 years. Had to build a software system to do kind of risk management work, event logging, and fell in love with the process of building. Just realized that as a person who in third grade their teacher said you'll never be an artist, you should stop trying. It was really the first time since then that I felt I could shape anything with creativity. So since then, that's all I've been doing is software development. Not a coder, more of the architect. Kind of.
Mm.
All right, here's where the entry and exit ways should go, and what the flow of the things would look like, and the bells and whistles, and the engineers build it. So I built the company. 2009, I started. 2019, I sold it, and it was a data analytics company. It was designed to identify events that were happening for publicly traded companies who were the clients. And so we had companies like, rail companies like CSX, their trains were coming off the track 20, 30 times a year. Sometimes it would happen in a rural, remote area at like 1 in the morning, and the execs didn't know about it until they read about it in the front page of the news. So they really needed a heads up system for things like that. And so our system could find, like, if somebody took a tweet or, now an X post of the train in their backyard and uploaded it, we would be able to find that, flag it, send it to them and say, do you have a problem? And they could spin up their talking points and kind of say, well, wasn't our fault that the train came off the tracks. It was the driver, or they overloaded the train, or the tracks needed work, or whatever. And that could save billions on their share price the next day, depending on how they spun it. So we did positive or negative events. Sometimes it was a product launch, like a credit card company was coming out with, and they just wanted to reach as many people as possible. And so we helped with that. We would look at things like cyber breaches and the impact of those things. And so over time, as you start seeing all these events and how they impacted the share price, you saw these patterns. The train would derail, the price would go down 3% the next day, 2% the day after that. They do a big product launch, the price would go up 3% the next day. Department of Justice would go to investigate some company, and the share price would drop 10% in a day. And over a 10-year period, you start getting good at understanding how kind of the market reacts to those types of events. And we always paid attention to that and said, you know what, we probably could do the other side of this, right? Because our client was the company that was being impacted. But we kind of joked internally, like maybe we should just be betting on these things because, it seems easy enough to make money off of it. And so after we sold the company to a private equity group, we kind of regrouped and thought about like, what do we want to do as sort of act two? It was the same leadership team and technical team. We knew we wanted to do something better than we did before, start working on AI. And we were really looking for kind of the right use case to solve problems because as we enjoy doing as a group. And we said, you know what about events from the investor side of it? What about predicting how events move share prices? And the idea was relatively simple. It was like, well, there's no one place I can go to figure out how a stock's going to move based on a news event or an announcement. So we wanted to make it as easy as looking at a weather forecast. Like, hey,
Mm.
it's going to rain. Looks like 80% chance of rain, and it's going to rain all day. You better bring your umbrella, or it's sunny over here. Go skiing. We wanted to do that for the stock market, and we felt like if we could do it and make it simple enough, we would bring down the barriers to entry of understanding all the intricacies of the market, that people have to learn before investing. And we also thought, hey, you know what? We could stop this constant overreaction to events. People panic sell, and then those who've been in the trenches for 20 years on Wall Street happily buy those stocks at a 25% discount during that panic sell, and they make all the money.
Mm-hmm.
As we were kind of, back testing some things, COVID-19 hit in early 2020. Stock market started to fall apart. People started to panic. I got lots of calls from friends and family that were worried about, their savings being eviscerated. There were predictions that we were going into a global depression and wouldn't be able to pay for college for kids and all these kinds of concerns. And it really crystallized in our minds like, yes, this is the mission. We need these kind of analytics for events so that in the moment of panic, people actually have something to turn to make those decisions. And as we kind of leaned into that, we realized it was actually a much larger opportunity. Not only could you do it with like these events that happen, not very often, but there were events that were happening daily that were moving share prices, 10%, 20%, sometimes 300% in a day. And I think we've all had the experience. You sort of turn on the TV or listen to the radio and they're like, oh, such and such stock is up 100% today. And you're like, well, that's great to know. Would have been better to know yesterday, before it went up 100%, so I could get in on these swings. And so we looked at how do we break that down? How do we kind of peel the onion back, try to understand what are the mechanics that are driving these big moves, and find those events before it becomes saturated in the market, right? Before the 300% run happens, or before the stock is
Mm-hmm.
up 1,000%, and make it just easier for people to invest.
This reminds me a lot of Jim Simons. Are you familiar with Jim
I
Simons?
am very much.
Yeah.
Yep. I mean, yeah, I have a very similar philosophy as they do at Rentec, which is there's no way to predict what the next Amazon's going to be. There's no way to predict
Mm-hmm.
what the next Microsoft or Google or Tesla or whatever. Even though all these stock picking sites, like that's their lead advertisement. It's like, hey, this is worth 20 Nvidias. They're all full of shit. What you can
Mm-hmm.
predict is a movement tomorrow, a couple days from now, a few weeks from now, even months from now, if you kind of know the pattern. After that, it gets foggy, right? Because you don't know what's going to happen. There could be another election, there new policy changes, a war breaks out, massive weather event occurs, like is going on in LA. All this crap that gets thrown at us is going to throw off the trajectory of these companies. Competitor comes in and kills them.
Mm-hmm.
Regulator comes in and says, we're going to dismantle you. So we really just focus on kind of the short and midterm predictions and pulling together those data points to find patterns. And what you can see when you do that, you're looking through the noise. And I'll give you a good example, like Dick's Sporting Goods store. For years, the sentiment in the market was brick and mortar's dead. Amazon killed them all. Maybe the Walmart will survive because they're large enough and they're in rural areas, but outside of Walmart, Target, and Amazon, forget it. It's over. And so it's driving down the price of Dick's. But meanwhile, Dick's is really the only sporting goods store at scale that's left. And they're increasing the size of their dividend double digits every quarter. And they keep doing that. And then they increase the size of their dividend by triple digits, 105% one quarter. So as the narrative is pushing down the share price, the company leadership's coming out and saying, I don't know, not listening to them. They're giving money back. They're giving money that they don't need for operations because there's so much money coming in. And if you follow those data points, stock's up 150% over time. Eventually, they prove the market right, or sorry, prove the market wrong. The earnings come out, they smash through all the expectations. Then the analysts all change their price targets, and everybody jumps on the stock afterwards, driving it further up. And that happens all the time. Where like you have these talking heads on CNBC, and they're like, this is dead, that's dead, and they don't follow the breadcrumb trails that the leadership is putting out there. Just sticking to the math and not worrying about all the rest of the noise. And so that's what the platform is really about. It's like, let's get rid of the noise, let's get rid of the opinions in the market, let's go
Mm-hmm.
based investing. And similar to how technical analysis was developed and kind of democratized about 10, 20 years ago, we're doing that for event driven investing, so that you don't have to just stare at graphs and try to figure out whether it's up or down based upon the color scheme or the type of candle. But now, like, there's something real behind this that's causing the movement. When a company gets $1 billion contract and they only do 100 million in revenue, that's a good thing.
Yeah.
Like, you can bet on that, and that's concrete. So,
Mm-hmm.
this is going to triple their revenue. Of course, they're going to grow 100% off an event like that.
Mm-hmm.
So we look for those, and we, put them on a platform and allow people to have a pretty cheap subscription for it. It's a few $100 a year to find like 5,000 of these opportunities a year.
Hmm. Uh, that kind of reminds me of there's a couple of trading platforms that I follow on social media, and a lot of times what they'll do is they create algorithms based off of other people's trading or other people's advice. And one of the algorithms that they created was off of Jim Cramer's advice.
Yeah, the inverse.
And if you would follow his advice, because you were mentioning the media and causing the storm of the stock price up and down,
Mm-hmm.
and if you would follow Kramer's picks, you would actually have over like a 10-year period would have lost your ass
Yeah.
on the market. So kind of like going back to what you're saying, it's these guys really don't know what the hell they're talking about most times, and they like to create panic just for clicks or viewerships or whatever.
Well,
But
that's right.
then
Yeah.
they'll the particular platform that I'm talking about, I talk about this platform all the time on my podcast, is Quiver Quantitative, if you're familiar with them.
Mm-hmm.
And they've got all of the politicians' trades too. And so they've got a algorithm that mimics Nancy Pelosi's trading, and that algorithm is up like crazy amount of percentage. And then if you compare that against Jim Cramer's picks, she blows him out of the water.
For sure. Yeah, there's a Nance ETF now that you can put money into that tracks it
Yep.
as well. There's a different provider that puts it out, and then there's an inverse Kramer ETF, which also is up. So it's interesting to see that she introduced, I think last week, a bill to stop trading.
Yeah.
Remember?
Yeah. AOC did.
Yeah.
She was part of the bill. Yeah. AOC to stop Congress from trading, which I'm sure they'll find some loophole around that.
I mean, there's always going to be a way, right? As long as they do ETFs, that's fine. They'll still have inside
Yeah.
information, and you saw them buying and selling ETFs, pre and post COVID. But yeah, I mean, it is a lot of that data sets where you're looking at it and like, do they even know anything? And I've looked through a lot of the congressional trading, and I find most of it is not very correlated to anything. It's like needle in a stack of needles to find something that's really good. Pelosi happens to be very good, or at least her husband is. Most of them
Mhm.
don't seem to know what they're doing. You'll see the same guy trading. He's selling On the same day, he's buying 2 million shares. So I'm like, I don't know what he's doing, day trading something. Uh, so it's hard to find stuff that's meaningful, because you have to figure out, okay, does this person have access to true inside information? Are they on a committee, that would grant
Mm-hmm.
them access to it and so forth? And you never know, their timeline could be 10 years. So you might not see dime one
Yeah.
until then. But, to your point, like a lot of the a lot of the dialogue, particularly among market commentators, is for clicks. So
Mm-hmm.
they talk about Elon Musk, all the time, public and private companies, because it drives views, it drives clicks, doesn't necessarily make any money. Same
Mm-hmm.
thing with the Magnificent Seven, over and over and over again. And while those are really important companies, there are a lot of others. There's like 6,000 others. And at any given time, one of those 6,000 is having a good day and one is having a bad day. And so, like,
Mm-hmm.
the basic math is like, you assume on any given day, at least 10 stocks are up at least 5%. And on any given day, at least 10 stocks are down at least 5%. So if you know the reasons for those, then you have a 5% opportunity every day times 250 trading days.
Mm-hmm.
That's a lot of percentage that you could be earning. If you did one a week at 5% and you're doing 20% a month, over the course of 10 months, you're at 120% return. You're 200%
It's
return.
crazy.
Yeah.
Now, does your platform actually do the trading, or are they just providing the analytics to decide on what to trade?
We're just analytics. I should say we are analytics. We are monitoring. We are alerting. And so you have everything but the buy and sell button. So, if you look, it'll give you a little bullish or bearish indicator of the event. You'll be able to see the average move for that event type. You can set an alert so that when it comes out, you know about it, and then you can filter it so that, if you're like me, like, I'll never buy materials companies typically. I try to stick to what I know, which is tech and healthcare. So when I look for alerts, I filter so that I only look at tech and healthcare companies having events. And I want to make sure that those companies are profitable companies that are growing revenues. So I can set
Yeah.
all those as my parameters and basically build an AI search agent. It's just pouring through information all the time. 30,000 documents a minute is what it's looking at. And
Wow.
just looking for certain types of events with those particular parameters of what type of company it is. And the time saving is enormous.
So your platform is kind of being used in conjunction with a trading platform for traders to make more educated decisions on their trades, whether they're buys, sells, shorts, all of that stuff.
Yeah, that's right. There's we call it, it's additive, right? To anything that's
Mhm.
being used. There's a lot of different ways people use it. Some use it for short term trading. Some are using it to identify shorting opportunities in the market because it's bearish or bullish. And so you can kind of match what's going on with the outside market. The general sentiment, like 2022, everything went down. So you look for opportunities that were bearish and you did well.
Mhm.
Last year, everything went up. So you look for bullish opportunities. This year, we're still trying to figure out which way we're going. Um,
Mhm.
One of the other ways that people will use it is, if you've got your kind of core holdings that you're going to have for a long time, there are still events that are happening to those stocks that might give you other opportunities. So, let's say you're an Amazon holder a few years ago, Jeff Bezos leaves. A lot of people sold thinking that was the end of Amazon. They're like, oh my God, growth is over. Bezos is gone. I got to get rid of this stock. And so that panic selling into the headlines created an opportunity to buy. It drove the share price down 10% over the course of a month. But our data analytics showed that within 3 months, it's typically back to where it normally is when a CEO departs a company of that size. So if you're following that and you say, okay, well, normally it's down 10 and then back to normal, I'm going to buy it when it goes down 10. I'm going to make 10 on the upswing. Maybe it's your core
Mhm.
holding and you just add another 10% without doing very much work, for a few months. That's one example. Another would be if there's a very positive event on one of your holdings, right? So Apple, you own it forever, comes along and they do $150 billion stock buyback, right? So stock goes crazy, goes up whatever it was, 19% in a day. If you are into selling or buying options, derivatives, that's a good opportunity to then take advantage of that kind of euphoria in the market, sell options on your existing holdings at an outrageously high premium. You might make 25% just selling the option premium. And then when it dies back down, you buy it back for like nothing, and you make money without actually having to buy or sell your core position. So there's other ways to generate like ongoing income. And there's new ETFs that are doing this kind of cover called strategies, and they're taking fees for it, but you can do this on your own very cheaply, using these type of tools that are available.
Can you explain to the audience what an ETF is?
Sure. I would explain it just like a group of stocks that trade as one stock. So could be 10, could be 500. So the the most common one is the SPY, which is 500 companies that compose the S&P 500 index. So it's just 500 stocks, and they all have a percentage of, within the ETF. There's a percentage of each. So say that ETF might be 10% Apple, 10% Amazon, 8% Tesla, and so forth. And it just trades as one individual equity. So you buy that ETF, you're effectively buying pieces of all those other companies.
So an ETF, in a sense, is the same thing as an index fund.
Yes, yes. These indexes are not really traded; they're just tracking mechanisms for prices. So if you
Mm,
want to buy the index, you have to buy the ETF that tracks the index, and that creates different opportunities. Which is why one of our scenarios is added to the S&P 500. So
mm-hmm,
when let's say a company in the S&P 500 gets bought, like I don't know what the last one was that left, but I think Etsy got booted out of the S&P 500, for underperformance. Then another stock gets added. When that stock gets added to the index, all ETFs that track the index have to buy that stock. It's a mechanical thing.
mm,
They have to. So that means that you're going to have billions of dollars being spent to purchase shares of that stock by all these ETFs made by Fidelity and
mm,
Vanguard, BlackRock, that have to track the index. And so it forces the share price up because of all the buying activity.
mm.
So the second the announcement goes out, that share price is going to go up just on those mechanics, on the buying day. So there's things like that there's happen in the market that are irrefutable facts. Not
Could you create your own ETFs?
We don't. I'd like to, but it's an expensive and kind of very long-term endeavor, just because of the regulatory environment. And you have to have enough liquidity in it. So it means you have to seed it with several $1 million, so that
Mm,
it has enough money to buy holdings. And then you gotta really, until you get it to like 100 million, nobody's interested in it, because it trades to there's not enough buyers and sellers, so you have these big gaps
sure.
between the prices. So but one day maybe.
Uh, is there a is there a trading platform that you recommend to use in alongside your platform? Is there one that you like or one that you think is good for kind of, I would say not professional day traders, but maybe somebody that does it on the side or something like that?
I think we're compatible with everything. Really, you just need to be able to trade options and trade equity. You need options, you can do straight equity. So our users, they have Robinhood, they have Interactive Brokers, they have Fidelity, they have TD. Some use some more advanced like API and webhook type systems that they've kind of built themselves using like Alpaca. Those are typically engineers that use our alerts as a trigger to trade. Uh, some are using.
But isn't there a limitation with, like, say, Robinhood or Fidelity, where um, you're limited on what stocks you could purchase? through their platform?
They should only be limited, if at all, to what's traded on the U.S. exchanges and whether or not they do OTCs, over the counters. So Fidelity, they just make you sign a little waiver. So,
Mm-hmm.
do you know this is a penny stock or OTC stock? Accept the risk, check, and then you go and you can trade those. Most of the ones that come through the system for us are just traded on the NASDAQ or the New York Stock Exchange. So you don't need
Mm-hmm.
anything special for that.
Mm-hmm.
I mean, these are companies that some of them have been around for 100 years. Others are newer, but a lot of the ones that we see again and again are stocks that they've been around. They're maybe 5 to 50 billion in market cap, and you just never heard of them.
Mm-hmm.
And there's so many like that. They're just all of a sudden out of the blue you'll get some alert for a coal mining stock. No idea why, right? But they're doing some kind of special dividend and they're giving away 8% return just if you sit there and hold the stock for the next 2 weeks. Why? Well, it happened when Russia invaded Ukraine and cut off the gas supply to Western Europe, and they had to move to coal. So drives up the price of coal. All of a sudden, coal companies start killing it. They give money back to shareholders. You don't need to be knowing all those like global connections. You just get the alert, and it's like, here, okay, you just buy and hold. Okay, yeah, I can do that. So there's a lot of those kind of just mechanical things that are happening in the market all the time, and you see it. When well, we're definitely going to be seeing it coming up with lots of tariffs coming and trade wars and
Mm-hmm. Mm-hmm.
lots of policy shifts and cost cutting measures. We are entering
Mm-hmm.
a very volatile period in the market where there's very much event driven, um,
Mm-hmm.
and that's going to have positive and negative effects on a lot of these companies. So I guarantee we'll see some reverberations from these trade wars, positively and negatively. We already started to with some of the American car manufacturers, kind of post election, doing really well with this feeling that, oh, wow, okay, Trump's going to eliminate tariffs on US cars to Europe. That's going to open up markets for GM and Ford. He's going to put tariffs on European cars. So competing vehicles like, BMWs and such are going to be more expensive, forcing people to buy American cars, which means GM's going to do better, Ford's going to do better, things like that, and you start seeing those outperformance in the share prices. So
Have you guys ever looked at using your platform? What like scenario trades? What the most amount of return you've seen could possibly get from a trade in certain time frames, whether it's a short time frame or a long time frame like a year, which is really not a long time frame, but for traders it's a long time frame.
yeah, yeah. I mean, we've each event, we call them scenarios. So each type of event has its own kind of analytics. So if you look at like added to S&P 500, that's a type of event, and it probably happens 3 times a month. So each event is worth maybe on a daily basis about 10%. So that's 30% per month times the 12 months, 360% cumulative possible return for that one scenario. Others happen more frequently. You might get 10 to 20 events per month, 4% movement, and you're looking at thousands of possible percentage cumulative returns on those types of events that happen more frequently, to include things like a CEO departing, major event, could be positive or negative depending on whether it's a good company or a bad company performance wise, but that happens all the time. Those movements can be 40-50% in a day. If the company's let's say if it's a poorly managed company and the CEO leaves, there's a celebration in the market when the CEO leaves. They're like, okay, great, now maybe we can turn this ship around, and you can see 40-50% in a day or over a couple of days, and you do that again and again and again, or even just grab a few of those a year, you are significantly outperforming any benchmark, any the rest of the market.
Mm-hmm.
And this is the part I try to stress to people is like, and you're doing it with lower risk, because your money is not exposed to all the things you can't control.
Mm-hmm.
Pandemics, wars, policy, trade wars, extreme weather, and so forth. So the less time you spend actually sitting vulnerable in stocks in the market, the less likely you're going to experience one of those days that are down 8%, 9%, like we saw during COVID.
I feel like you would have to really watch all day or every day those events to be able to make that trade as fast as possible. So, like in your scenario where you say, a CEO leaving, if you're tracking that event and that is announced, there's traders that are already ahead of you making those trades, uh, which I would assume would reduce your return because if you're doing it, on the mobily whenever like throughout your day sometime, you're not going to make that as high of a return unless you're watching it all the time, correct?
Yes and no. I mean, let's assume you're day trading it, which is fine. We'll get the event typically within 40 minutes of the announcement. Not that many people are going to get it that fast. You have to be really sitting on it, knowing or looking for news for that particular company on that particular day. Um, so it doesn't move as fast as you think for that reason. Also, people, no matter who they are busy doing other things. Like we all get to work, we commute, we have kids that have to get out the door, we've got dogs that have to be walked. Like there are lots of distractions for everybody for why you can't go in there and do it that fast. And most of the money is actually managed by institutions that are very slow moving. Wealth managers control $100 trillion in assets. They are not day trading this stuff. They're going to see it maybe late in the day, if not the next day, and go, oh, I wonder if I should think about this differently, right?
Yeah,
Usually
yeah,
they,
I've
yeah.
read that, and I've read that, and I've also listened to interviews of like Peter Finch or is that right? BlackRock CEO
Hmm.
Finch, right?
I don't know if he's the CEO, but yeah, I
Or
know what you
Fick.
mean.
Um, and Ray Dalio, and they've
Hmm.
said they are very, very conservative when they trade because they know that one of their trades will create massive ripple effect in the market because of the dollar amount that they trade with,
Yes,
especially BlackRock.
yes, that's true. They drive up the price on themselves when they're buying so many shares, which is also why a lot of them go on television to say, what they like, usually to drive up interest so they can sell it to you, so they
Mm,
can offload it. That's what I found CNBC to be very useful for, is dumping shares.
wow, that's interesting.
Yeah, because if you're
Huh,
going to sell 10 million shares, you need people to buy 10 million shares. Otherwise, as you're selling it, you have to keep lowering the price again and again and again to find enough buyers. So they got to drum up interest, and
right.
we see a lot of that kind of dumping, unfortunately. Um,
At
but
that point, that's when you would want to make uh, uh, a an option against or a short against that those uh, what BlackRock is doing, right? If they're trying to sell.
yeah, if you sniff it out and you can say, okay, they're going to try to do this over the next couple of weeks, I'll buy put to short stock, with an expiration date 3 months out, knowing that usually you see
Mm-hmm,
this kind of increase on day one, day two, then day three, it starts to really tank. When
mm-hmm,
there's not enough buyers to deal with their selling,
mm-hmm.
that's when you start to see it. And it's just very common, unfortunately, in the market. They have to do those things because otherwise, if there's not enough demand, they can't get rid of the shares.
Right.
But even if, even in most cases, right, you've got wealth managers they're just slower to it. They're meeting with clients, they're managing clients, they're doing back office tasks, they're dealing with compliance stuff. They're not really spending a whole lot of time on the day-to-day management of the positions because they're longer term. So if they see something, usually it's reaction after the analysts have changed their opinion on the stock. The sell side analysts will
Mm-hmm,
say, oh, CEO of Starbucks got fired, got replaced by the CEO of Chipotle. Based on this, we're increasing our price target on Starbucks, calling it an outperform. We're going to raise the price target from $70 to 84. At that point, then the wealth managers will get those analysts' reports and then might start looking at it and saying, huh, okay,
Hmm.
maybe we should allocate some dollars over there. So it actually happens a lot slower than you would think for the larger companies. Like small companies that aren't very liquid, meaning they don't have a lot of shares that are they're trading. They do move, pretty quickly because they're like penny stocks. But the bigger ones, it can take weeks for companies to move into the position. They can't deploy capital that fast.
Right.
And you do see that when they do, you'll see on the line, it will be a vertical line, like straight up when they go and they buy a stock. Because most of the time that happens when a company buys back its own shares
Yeah.
and it hits a low price point, and all we see that it just goes vertical. You're like, what the hell happened there? And you see this huge, goes from volume goes from like 200,000 to a million in an hour, and the share price jumps 10 points. That's often, either the company buying its own shares or some big institutional investor just doing a big purchase.
Mm.
And that drives everything else in the market afterwards, which is the part we haven't talked about, right? So those moves happen, but then there's algorithms in the market that just track momentum and technical indicators. They don't even know why they're doing it. They're just programmed to do it. So you get that big stock buyback or you get that big position movement, and then those algorithms see that big upward moves, they jump on it to try to get the last 2 or 3 percentage. That drives the
Hmm.
stock up even further. So all
Hmm.
this is happening way after you saw the event of the day.
Hmm.
And by the way, this is just a 1 day thing. Like we know from looking at this particular situation in Starbucks, getting Chipotle as the CEO, it's going to take a couple of years to turn around the company if he can. And
Hmm.
you think he can? I don't know. Hopefully he does it because I haven't had a Starbucks in years because of the lines. So it would be nice to not have to wait in line, for 40 minutes to get a cup of coffee.
Right.
But that's going to take a while. And if he does it and it's a screaming success and they can come out with, I don't know, robot baristas or something, then great. Then the share price should double. And then it's a long term play. You know,
Is your platform? Do you have an app? Or is it web based only?
it's web based, so you can access it on mobile, but we don't have a mobile app.
You don't have a mobile app. Okay. And so when these alerts come out, is there a way that uh, it's set up where like maybe it emails somebody or texts somebody what the alerts are so they can make decisions on the fly?
Yeah, you get an email for sure. The platform will send that. The AI email comes out, and then you can get that on mobile, obviously, and React. We also have like our premium subscription service where we have analysts that are looking at our own alerts and events and kind of doing like editors picks of them, saying like, "Oh, this
Mm-hmm.
this I think is going to crush it," and they will send out like an explanation, a little more detail, of like why it's a good buy, what's the price target, what's a good entry point, and then that goes out as a text message as well as an email. So you sort of pay a little bit more, but you have somebody looking after the trade all the time. So
Mm-hmm.
that, if it, to your point, like if you're busy, you got to go to work and you enter a trade and all of a sudden something shifts in the market, they will text you to say, all right, time to cut and get out. We're up 10%. Let's not shoot for 20%. Let's just take it because, we're hitting some resistance in the market. Or, the opposite happens too.
Yeah. Are you familiar with the trading platform Composer
Yeah.
by
Yeah.
chance? I'm just like talking out loud here because I'm a kind of geek about this kind of stuff too. I especially love like automation.
Hmm.
Do you guys have open APIs with your guys' platform?
We don't now. It's one of
Oh,
those that's on our roadmap so that we can integrate a little bit better down the road.
yeah, because that's what I was thinking. If you integrated with Composer, and Composer is a very automated system,
Hmm.
right? It'd be cool where Composer could make those trades for you based on the alerts. Just a thought.
Yeah. No,
That's
we've
pretty
had some of
cool.
that feedback from the developers that come through that kind of find different ways to automate things, but that's kind of their technology. It's not ours. We
Right.
do want to make it easier, but we're not at that point yet.
Yeah. And you started this what in 2019, 2020?
2020, yeah, we officially formed the company in 2020. It took a couple years of R&D. Then we tested for a year, sort of a closed beta test. So really kind of went for it like fall of 2023.
How are you guys grabbing all of this information? I mean, because all of those events, I mean, there's so many events. Where do you go to grab all that data?
Is a tremendous amount of data that we're processing, right? So
Yeah.
we have to break it down into we get the market data, so that's pricing data every 15 minutes from the exchanges, which is a lot times all the
Mhm.
equities. Then we have to have the financials of every company, so the different data sets. So it's all the profit and loss statements, the balance sheets, the cash flow statements, and we're breaking those down into different metrics: revenue growth, earnings growth, whether it's optionable sector, industry, sub-industry, some cases theme. And then we have kind of the linguistic parts, right, where we grab all the press releases, all the news, all the reports, and then pour through that to come out with the only the events that matter. So the filtering is basically we get about 23 million events per year pulled out, of which we pull 5,000 to be on the platform that are highly correlated with stock price. And then you, as a user, can pick and choose, which type of events you want to be of those. So it's quite a lot.
I can't imagine the cost behind that because one thing that I tried to do with my business, again, automation, right? I tried to create a dashboard, Power BI dashboard that would pull in my CRM, my club management software, and what was the third source? There was a third. Oh, I was trying to make a QuickBooks connector too, and I was going to draw all that in to be able to visualize and parse the data in my business. Because right, what was happening is the staff would have to print out all these reports, right, and then manually enter that data into a huge spreadsheet that I had built to try and create KPIs on the business so I could see what my business was doing. So I wanted to automate all of that using the APIs of all these platforms, using Databricks to ETL it, using Azure to put it into a flat file, to then use SQL to
Mm-hmm.
parse it and organize it, blah, 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 blah.
Mm-hmm.
And just doing that, it was not, I mean, it was for my business, it was a lot of data, but just doing that was the cost was crazy. I had to abandon the project because the server cost alone
Yep.
was astronomical.
Oh yeah, that's why these companies are doing so well. They're
Yeah.
charging so much money for this. We yeah
Right.
we couldn't do the cloud because the cloud would cost us about 6 times as much as we currently spend.
Oh, so this is all on your guys' servers?
We use a dedicated data center, so we have dedicated servers. We've got
Uh-huh.
some NVIDIA powered GPUs. We
Uh-huh.
scale up when we need to, but we have our own hardware in those data centers. They kind of monitor for threats and things like that. But we have to because if we didn't, it would just be astronomical
Yeah.
and a little bit unpredictable too on the pricing. Because it just
Yeah.
we get various types of surges, whether it's by users or sometimes nefarious actors that are trying to steal data or hack or all that kind of stuff. That just especially in the early days, it was it was pretty crazy. Like we had all these Chinese hackers and Russian hackers trying to steal the data from the site, trying to scrape it at
Really?
scale. Oh yeah,
Oh,
and that's when we kind of knew we had something big. Also, like
yeah.
you're nobody
Yeah.
until everybody tries to steal from you.
Yeah. Yeah. Yeah.
But
Wow, that's
it
insane.
was wild because it would drop the servers and we're like, what the hell happened? And we look and like be getting the equivalent of 30,000 clicks a second, all from these sites. They're just trying to siphon the data. So we had to spend money on kind of the walled garden and cyber stuff. But once we did that, it subsided, and now we're dealing with hundreds of terabytes of data processing. So now it's more about like making sure the hardware stays up to date because you know before long, you look up and you're like, oh wow, this has been going on for 4 years. Now we have outdated hardware. We're gonna
Yeah.
switch out the hardware.
Yeah. I mean, NVIDIA just had their, I don't know if it was their conference or if it was their presentation to the CES and what they just debuted with like their little PC that's 1,000 times faster than the normal laptop nowadays. That's insane.
Oh yeah, I know, I know, and then it's the same kind of in the data centers with the servers that are orders of magnitude more processing capability, and they don't overheat, quite as much. So
Yeah.
it is a big task. We kind of internally, we get some of these like customer service requests where it's like, why isn't this free? This should be free.
Yeah.
You guys should just offer free everything. And we're like, we'd love to, but we are not Google. We
Right.
actually have to pay for what we eat here.
Yeah. Yeah.
And so it's not a good economic model to give something away for free that costs tons of money.
What, how are you guys leveraging AI? Are you leveraging um, A- LLMs that are already existing, or you're creating your own? Or
No, we built our own.
oh wow,
So we started building in 2019, and we have models that are unique for financial services. So that helps kind of cut down a lot of the processing needs and training needs, but also allows us to be more specialized in understanding what it is the AI is reading and the context for it. And for instance, there's a bluebird bio and there's a bluebird that flies in the sky. If you were to use kind of an off the shelf LLM, you've got to go and train it like thousands of times on the differences between those two things, because we just go for a certain type of approach in financial services. We already know that Bluebird Bio, nicknamed Bluebird, is a biotech company.
mm-hmm,
But there
mm-hmm,
are other challenges, like AstraZeneca is referred to as AstraZeneca here. There's Astra, rocket company in Houston,
mm-hmm.
but in the UK they call AstraZeneca Astra in the newspaper. So how do you know the difference, right? So this sort of like understanding the alias, the context, the
Yeah.
the paper source, right? The newspaper,
Mm-hmm,
and where it's located, in the description. So all of those kind of contextual cues, we had to build like probabilistic models to determine, hey, okay, this is a whole article about science,
mm-hmm.
and it's about healthcare and science. It's probably not about rockets. Therefore, it must be about healthcare science, which means
Right.
Astra equals AstraZeneca. So
Yeah.
doing that times like hundreds of different algorithms for meaning and direction and context, aliases, and then along the way, like every day, we're training the system as stuff comes in, so it gets smarter and smarter on these
Mm-hmm.
particular types of events that we're interested in. So it's been,
Do you find it hard to find developers to be able to build all of this stuff out?
yes, yeah. I
Yeah.
mean, fortunately for us, like we built it all with really good people. We've got PhDs, that still work for us and worked for us before in linguistics and astrophysics and AI. So
What, really? Astrophysics?
yeah, the middle tier, because it's a lot of data processing. So we
Uh,
basically need like mathematicians to sort of figure out rate based algorithms and how to do calculations and create formulas to populate
wow.
the sets. It's it's an interesting group that we've put together, and we're moving towards the next generation of the application, which is going to be a lot more flexible for user needs, so that you can come in and kind of pick and choose what you want to follow and have more control over the data that you want to look at, and can manipulate it and do
Mm-hmm.
some automations and goodies I won't fully reveal here, but maybe next time I'll be ready to talk about.
Yeah. Um, does do you think that quantum computing is this, or is this too far ahead? Do you think quantum computing is going to revolutionize your industry?
I think it would revolutionize every industry. Like,
Oh, for sure.
yeah, I mean, just in what we're talking about, right? Like the costs of data processing are quite high right now. So if you could, take the same GPU and do 1,000 or 10,000 times more processing with it, then that should not just drop costs for everybody, but also allows you to get to a lot more answers more quickly and
Sure.
move things. I mean, just like even just moving data for us for like one server to the next can take weeks. Just transferring
Mm,
the data, things like that, like little tasks that like you got to sit and kind of monitor. Then occasionally the server times out while you're doing it, stop and restart the
mm-hmm,
server, and somebody got to watch that. Likewise, if you're running computational models and trying to figure out like is this going to work, it can take like days to pour through all the data, particularly when we're doing things like text search takes a long time. It's actually much slower than numerical processing.
mm-hmm,
So for us to like run some of these searches, it takes a lot of juice, it takes a lot of bandwidth. So if you're
mm,
switching to something like quantum computing where you can do that 1,000 times faster, something that might take 2 days, could be done in an hour, 10 minutes.
right.
Um, so you look at that, and then in financial services, I think the main use are going to be folks like us that are doing kind of AI driven things. Probably going to
Mm-hmm,
be you know quant driven hedge funds that are just trying to find faster mathematical models to get that 1/4% more per trade, a little bit
mm-hmm,
faster processing of the momentum signal. Not a huge value add to society there, but when you look at like biopharmaceutical research,
mm-hmm,
and they're trying to figure out like different chemical models for how some drug might impact the human body, and then you've got potentially an array of like 300 different human body models based upon blood type, age, sex, parental
mm-hmm,
history, all your biomarkers, right? You could create all these virtual models of humans and then do these projections. See, well, let's see
mm-hmm,
how this drug will impact this individual. You can't do that stuff now
mm-hmm.
because it's too expensive.
Right.
That to me is really exciting because it's like now the treatment's often one size fits all when you go to see a doctor. And
Yep.
I've been one of those where like I know I've had various infections, and like some of the antibiotics they give me just they don't work. We have to
Mm-hmm,
go through this process all over again. Like I give the generic Cipro kill everything antibiotic, then I come back and I'm still sick, 7 days later. So they give me the better stuff, and then that doesn't work. And then finally, the newer stuff, and that whole process might have taken 3 weeks when they could have, done some early
yeah.
testing, have a model, and know, hey, Cipro works only for these types of people with these types of cases. And you skip out a lot of misery and human suffering along the way. Not to mention those that die during this treatment course.
Sure.
Thankfully, it wasn't me. But
Well, plus nowadays it's like more and more people are antibiotic resistant
mm,
because it's been prescribed so much now.
it's been prescribed so much, people don't finish their prescriptions. That's really the main culprit is if you don't finish your prescription, gives it a
Right.
chance to kind of grow back.
Right.
So there's
I thought the interesting thing too about antibiotics is if you read the label on a lot of them, it says, reduces your ability to fight infection.
mhm.
You're taking an antibiotic for an infection, that's crazy to me.
Well, it does because it wipes out all your good gut
Good.
bacteria. So
Yeah.
it should be a last resort. Unfortunately, we're very like kind of pill oriented, like I
Yeah.
want immediately relief society, so we want to just get in there and bomb whatever's
Right.
hurting us.
Well, you were in the medical industry. I mean, let me ask you: wouldn't it be better just to take an antibiotic shot rather than an antibiotic pill? Because the shot would bypass the gut, right? So you wouldn't hurt your good bacteria. It'd be in the bloodstream to kill the infection, wouldn't it?
Theoretically, yeah. I'm not a medical expert, so I wouldn't be able to weigh on that particularly, but there's certainly certain antibiotics I know that are supposed to deliver like payloads to different parts of your body more effectively. So
Mm-hmm.
if you get an ear infection, they're not going to give you Cipro because it's usually for the gut. But they're also, and I know they're doing a lot of this in cancer research, like developing different ways to deploy to specific cells in your body. So
Mm-hmm.
like link up with the the T cells to carry it over into the cancer cell and then deploy the DNA that destroys the cancer. So I would imagine someone somewhere is working on something similar for antibiotics, to carry it
Hmm.
specifically to that spot. So if you've got,
Hmm.
a bronchitis in your throat, you don't need to be killing everything that's in your gut.
Right.
Yeah, but I don't know. I mean, anxious for those things to come out because I think it can't be soon enough. And
I agree.
unfortunately, I've read recently that there's a lot of these companies that have been doing research to develop different antibiotics are going out of business because they can't sell the drugs for a high enough price.
Hmm.
Because of CMS.
Going back to your history a little bit, did you said that you worked on trying to find the mercury where it was coming from and whatnot? Did you ever figure out where it was coming from?
I did, yeah, we did. Offshore oil rigs.
Really?
There's about 4,000 in the Gulf. Um, they use mercury as a drilling lubricant. They pour it all over the drill to make it go into the ground easier. It goes into the ground in an inorganic state. So it means like if you were to drink it, it would just come right out of your body, it wouldn't harm you. But
Uh-huh.
when it goes to the seafloor, there's different organisms that ingest it and then can convert it into a organic form of mercury. So at
Wow.
that point, you imagine like little critters on the bottom that are eaten by, um, you know, shellfish and crabs and whatnot, and
Mhm.
then the fish come up, smaller fish that eat the crabs, and then the bigger fish eat the smaller fish, and it accumulates up the food chain to the tuna population, which likes to sit underneath these oil rigs for cover as a predator. And the fishermen come up to the oil rigs and they fish right off the oil rig, pull the bluefin tuna out, or whatever albacore, bring it home, eat it, or pack it up and put it in the tuna fish and get shipped out to everybody. So
So that's why they would always say people that ate a lot of sushi would get mercury poisoning is from for that exact reason.
yes, that's why they say pregnant women should not have tuna fish.
Oh, okay.
Yep. So it's one of those where like the regulation was you can't have organic mercury being dumped into the Gulf of Mexico. That was the EPA standard, and so the oil companies did not. But there was inorganic mercury being dumped by the thousands or hundreds of thousands of gallons, and just fell through the loophole of regulation, and that's how we have this problem.
And so they weren't willing to change the loophole or change the product that they were using to prevent this from happening.
I don't know what happened to it. Honestly, I was 20 years ago at this point.
Yeah.
I didn't
Hmm.
track how this thing might have progressed, in terms of legislation.
Mm.
I was just the data scientist, that went and like cut people's hair, took it to the lab and matched the hair samples to different surveys that we were doing, and then tried to map it um, to figure out the transmission routes. So it was an interesting project. And occasionally I would have, because we were down there in the Gulf, we'd have people that walk up to us. They're like, I work on one of these rigs. We dump all kinds of stuff all night long. We just shut off our lights and dump.
Ugh.
And they didn't like doing it, but they didn't know what else to do because they needed the work. They didn't want to
Right.
get fired. Didn't know how to blow the whistle. They were hoping like we would be the ones to blow the whistle, but we're public health researchers. We don't really know anybody in politics that can make a change here.
I had no idea there was that many oil rigs in the Gulf. 4,000?
We're 1,000. Yeah, it's a ton. And I would gather that there's going to be more 4 years from now.
Yeah. I remember reading an article a few years ago where there was, I believe it was a professor up in the New York area, somewhere up there, and he started running some analytics on ALS patients and where they geographically lived, and they would map it. They would pin it on maps, and they started doing that. I think for most of the eastern seaboard, based on the data that they could get their hands on. And they found that a lot of these ALS patients lived along or near water sources, lakes or rivers. And so the theory was is there's something in the water that was causing these people to get ALS. I don't know whatever happened with it. This was years ago that I I read it, but I thought that was fascinating. Like why more of that stuff isn't done, like with certain types of cancers, or I'm sure it is, but maybe that is not publicly available. I don't know, but I thought that was fascinating.
It is done, but someone has to pay for the research, and
Mhm.
the contaminator is usually not the one that wants to foot the bill for the research. That's just the economics of it. So we had a similar type of engagement. So I work for a company called John Snow Incorporated, and it was named after the first epidemiologist. John Snow solved the cholera epidemic in London in the 1800s, and he did it just by putting pins in a map of where the cases were. They started to see that everybody who lived around this one public pump for freshwater got cholera, and then
Mm.
figured out what the source was. So it was a similar way. We had this case in Pittsfield, Massachusetts. General Electric used to operate there, and they built some kind of plastics. They had all kinds of uh, PCBs and petrochemicals that were leached into the ground. And there's a community nearby that was having a lot of cancer clusters, but more than that, there were a lot of like skin diseases, like an abnormal
Mm.
amount of skin diseases. And so the community, they I don't know where they got the funds, but they figured out a way to get like $15,000 together just to do an initial assessment of whether there might have been,
Mm.
a there, right? And there's some correlation. And so I was brought in to be a part of that. When we did the analysis, we found out that for the most part, anybody who had a private well was 100 times more likely or so to get eczema and all these skin irritations. Those who were
Wow.
on the public system really weren't experiencing anything. No hair loss, no eczema. And so we realized, okay, if that's the case, we already know it's in the groundwater, and we can
Mm.
start to look at the more extreme cases and hone in on where those areas were. And sure enough, when you pull out the map and you do the historic analysis, which is called phase one, you can see kind of where the company used to operate, where the whole sinkholes and things that they would pour the effluents were, how they would get into the water, and then it would map that to where the current um, ground wells were drilled, and there was clear as day, from a very common sense point of view, overlap between those places. So that was, again, like we come in, we do those projects, and I never knew what happened afterwards, years later, but I know it was, sorry, it wasn't GE, it was Dow Chemical. And they
Mm.
brought in Dow Chemical representatives, and they kind of met with the local community and tried to come out with some kind of way to do the cleanup in a way that was going to make everybody happy, but also make people trust them, because it's like, all right, so you're going to get the person that contaminated the land to clean up the land. That's a tough sell for trust.
Right.
It's like
Right.
getting the guy who just rear-ended you to go and fix your car.
Right.
And you're like, I don't know about that.
I can see why you got into the finance sector because that's really depressing.
It was, and that's why I was like, I had to get out of there and do things that were more proactively preventing
Yeah.
these types of things.
Yeah.
Um, because it was just like, okay, yeah, you all were contaminated. Have a nice day. Hope it gets better. I was just paid to do the research and find the correlation. So you ended up feeling kind of helpless because you couldn't really change anything. That was someone else's
Right.
job. So ultimately, we went to grad school to do the mitigation like up front, with thinking I was going to be an environmental management guy in large corporations, but the I don't know, life had a different plan for me, I guess.
No, I love I love the route that you went. I mean, I could talk to you for hours about this stuff. I'm a numbers nerd. I love data. I love analyzing data. What's next for the business? What do you have on the horizon for 2025? What new services or products you plan on rolling out for your customers?
Yeah, so we're we're going to continue the current business, right? We have launched about a year and a half ago this sort of premium version that I was mentioning, which kind of picks out the trades and does a lot of the heavy lifting for people. It's our level 2 membership, and then we're going to keep developing different types of events to do analysis. We're going to put some more longer term events on the platform for people who not necessarily want to day trade or even like swing trade, but they just want to find good quality stocks based on data and not,
Hmm.
like the opinions like we were talking about on CNBC. Just quality companies will do some of those pre-filtered screens that are live. A lot of people do that easier. Add some more features to our watch list. So if there's paper trading now, then they'll be able to kind of control more of their idea flow, keep track, add notes. We'll do some automated reports and things of that nature. So hopefully, I would say loosely within the next like 3 to 6 months, we'll have a whole barrage of new stuff. Um, as long as we don't get distracted, which sometimes happens. We do listen to our users who write in. They're like, I really need this, I really want this. And we get,
Yeah.
8 or 10 of them that say, then we're like, all right, let's change the product timeline a little bit. Let's make the users happy.
Yeah. That's very cool. Andrew, I'm definitely going to check out your platform. This is something I'm actually interested in, and I've been thinking about dabbling in a little trading myself on the side. So this is something I definitely want to check out. I really appreciate you coming on. Where can everybody get a hold of you, or what's the website again for your platform?
Yeah, thank you. Enjoyed talking to you as well. It's LevelFields.ai is the website. We have a YouTube channel where we put out some stock tips. They're pretty cool videos. They're short, so you don't have to spend a lot of time on it. We've got a news feed and a blog on LevelFields.ai. Then you can sign up for the application right there. So lots of stuff, freebies and paid subscriptions as well.
Awesome.
Yeah.
Andrew, thanks so much. This was a lot of fun. I definitely want to have you on later this year so we can see how you advance the platform because I'm definitely interested in this
No,
stuff.
happy to do it. Yeah, thank you.
Awesome.
Appreciate it.
Thanks again.